This is Joe Battipaglia, market strategist for the Private Client Group at Stifel Nicolaus. We've had a 75% cash position in our equity portfolio for most of the year. And I'm very proud of the fact that we're down quite slightly so far this year. It allows us the opportunity to assess the situation and, in a deliberate and slow process, reinsert ourselves into the stock market where we see growing opportunities. It's a funny thing about investing, it's counterintuitive. When the market was flirting with 14,000 and new highs beyond that, investors couldn't buy enough. Now that we're at 8,000 or so, everyone's fleeing the market and they don't want risk. I look at it in a different way. At 14,000 you have the most risk, and at 8,000 it's most attractive. So we are going to move into the stock market over the next 9 months as we ultimately work through the economic issues. Now, what stocks do you buy? What sectors to buy? The flattening of valuations has been so severe, whether you're on oils or railroads or biotechnology, that you really can go back to your old favorites. I don't care what sector you look at. I don't care whether you look at large companies or small companies, or whether they're considered value or growth. They've all suffered a serious contraction in this last bear market. So consequently, they're all looking much better to me. Now, the first groups coming out of the box more than likely will be the ones that do not have a lot of debt, that still generate good cash flows in recessions, that are sort of a safe haven for investors during tough times. The second group that's going to be most compelling will be the smaller companies. Why the smaller companies? Well, they tend to have a smaller float in terms of the numbers of shares available, and once investors get excited about the opportunities, they go running through the door together to try and buy these stocks. And as we all know, that door is never big enough to accommodate everybody, so consequently small cap stock prices jump faster than their larger brethren when you start to make recovery. So if I had to focus on two things here, it would be companies that are financially solvent to get through the tough time, and then the small cap stocks to get the biggest bang for the buck coming into recovery. And I don't really care what industry they're in as long as they meet those essential criteria.